Hi friends, welcome to Trade Advisor's second video on technical analysis. In previous video, I explained about the uses of technical analysis and about open, high, low, and close prices. I explained about the use of bars and candles for representing open, high, low, and close prices. After that, I explained about making the line chart with closing price and about the bar and candlestick charts by using open, high, low, and close prices. Lastly, I told about the support and resistance prices. Friends, by now, we have adequate information to go ahead and learn different techniques used for technical analysis for anticipating the future price movement of any stock, future, or index. The technical study consists analysis with the help of trend and trend lines, chart patterns, moving averages, indicators, oscillators, envelopes, and candlestick patterns. Friends, please note that, at a time, I will be explaining a single technique for analysis. For example, at present, I am explaining about the trend lines. And I will explain about the buy and sell signals, as per only that technique. But, in practice, you will have to observe many techniques simultaneously, and then take the buy and sell decisions. Those techniques will be explained, step by step, in subsequent videos of this series. So, please, watch all the videos for successful investing. In this video, we will understand about trends, trend lines, and their uses. You might know that the stock prices tend to follow some trend. Trend is the direction of price movement. The price movement may either in upward direction, or in downward direction, or the sideways direction, as can be seen in 3 sketches on the slide. In the upward or rising movement, the stock price goes on increasing. In downward or falling movement, the stock price goes on decreasing. And, in sideways, or the range-bound movement, the stock price oscillates in a small range. In all these trends, the price does not rise or fall in a straight line. Occasionally, the price moves in opposite direction of main direction, and again it starts moving in its original direction. This opposite move is called as counter move, or a retracement. The terms reaction and correction are also used to describe these counter moves. This results in the formation of tops and bottoms, or highs and lows, in the zigzag movement of the stock price. To decide whether the trend is up or down, we have to check the positions of tops and bottoms in zigzag price movement. If these conditions are satisfied, then one can ensure the direction of the price. The uptrend is identified by higher tops and higher bottoms in the price movement, as shown in the left figure. The price at top T2 is more than the price at top T1, and the bottom B2 is more than the bottom B1. This forms higher top and higher bottom. If you observe higher tops and higher bottoms in the price chart, then the trend is identified as rising trend, or the uptrend. The downtrend is identified by lower tops and lower bottoms. In the centered figure, the top T2 is lower than the top T1, and the bottom B2 is lower than the bottom B1. This forms lower top and lower bottom. If you observe lower tops and lower bottoms in the price chart, then the trend is identified as falling, or the downtrend. The flat trend is identified by almost equal prices for all tops and all bottoms, as shown in right-hand figure C. In this figure, tops T1 and T2 are at the same level and bottoms B1 and B2 are at same level. If you observe the tops and bottoms of same price levels, then it is flat trend. This is also called as range-bound movement of the stock price. The difference between tops or bottoms is termed as the range. Trend lines are drawn to understand more details about the trend. Trend line is a straight line connecting tops or bottoms, or the both, according to the direction of the price movement. We should draw a rising trend line in uptrend, falling trend line in a downtrend, and parallel trend lines in a flat trend. If the stock price is rising, then the rising trend line is drawn by connecting higher bottoms, as shown in sketch and the image. You can see many bottoms touching the trend line in the image. The number of the bottoms touching the trend line gives an idea about the strength of the trend. If more than 2 bottoms are on the trend line, then the strength of the uptrend is said to be more. The strength of the trend increases further if the bottoms touching the trend line increase. The falling trend line is drawn by connecting lower tops, as shown in sketch and the image in this slide. The number of the tops touching the trend line gives an idea about the strength of the trend. Higher the number of tops touching to the trend line, higher is the strength of that downtrend. To indicate the flat trend, 2 trend lines are drawn, one by connecting tops and the other by connecting the bottoms. So, there are 2 trend lines, as shown in the sketch. You can see the manner in which the trend lines are drawn for range-bound area of stock price in this image. Let us now understand the importance and the uses of the trend lines. Trend line is a useful technique to identify the support and resistance levels and the possible trend reversal. This can be understood from the sketches on this slide. If the stock has strong rising trend for a long period and the price has gone up substantially, as shown in left sketch, then the stock becomes overbought. In this case, you can draw the rising trend line by connecting as many lower bottoms as possible, as shown in the sketch. If the stock price breaks this strong rising trend line, as indicated by letter, and if the stock price starts falling in downward direction, one can decide to sell the stock from his portfolio or short the future, because the violation of trend line by the stock price indicates possible change in previous uptrend. You are aware that the stock price does not rise in a straight line. There are counter moves or retracements in any trend. If the stock price approaches the trend line during its counter move or retracement and bounces back, then the price continues to move in the original direction. Thus, rising trend line indicates the support levels for the stock, where the stock can be bought again, because the price tends to rise after touching the rising trend line. If the stock has strong falling trend for a long period and the price has gone down substantially, as shown in right sketch, then the stock becomes oversold. In this case, you can draw the falling trend line by connecting as many lower tops as possible, as shown in the sketch. If the stock price breaks this strong falling trend line, as indicated by letter, and if the stock price starts rising in upward direction, one can decide to buy the stock in his portfolio or buy the future, because the violation of trend line by the stock price indicates possible change in previous downtrend. Again, in falling trend, the stock price does not fall in a straight line. There are counter moves in falling trend. If the stock price approaches the trend line during its counter move and bounces back, then the price continues to move in the original direction. Thus, falling trend line indicates the resistance levels for the stock, where the future can be sold, because the price tends to fall after touching the falling trend line. Thus, the trend line indicates support in uptrend and it indicates resistance in falling trend. In this image, you can see the trend reversal from downtrend to uptrend after the stock price breaks below trend line as indicated by an arrow. And in this image, you can see the trend reversal from uptrend to downtrend after the stock price breaks above the trend line as indicated by an arrow. In case of the flat trend, the stock price may break either top trend line or the bottom trend line. If the price breaks top trend line, then the stock price will go in uptrend. This gives buy signal. If the stock price breaks the bottom trend line, then it will go in the downtrend. This gives sell signal. Friends, now we'll show you how to draw the trend lines on the price chart of any stock or other instrument. There are many websites on which you can do the technical analysis. With the help of drawing tools and studies, you can do the analysis. You can see the charts of different types. There are a few software applications available for the technical analysis. These also can be used for the technical analysis. AMI Broker, NinjaTrader, eSignal and Metastock are such popular software applications. Friends, please share this video with your friends. Thank you.